Hello dear students, welcome to Devika's Commerce and Management Academy. So today we'll see a lengthy problem related to the break-even analysis. In the previous classes, formulas, if you remember, problems are quite easy. Last to last class formulas, all the formulas I gave you in one class, and the previous class also small problems, okay, short problems we have done too. Now this is lengthy problem, but you can understand it. Please remember the formulas. Before going to the session, let me remind you once again, please check out the playlist. There are many subjects prepared for the student community at the rate free of cost. Please share these videos so that everyone can get the benefit and I can utilize my time and energy. Now let me come to the problem. The problem is given here. You are required to calculate PV ratio, break-even point, margin of safety, sales required to earn a profit of 30,000. Four things we have to do: PV ratio, BEP, margin of safety, sales required to earn a profit of 30,000. What is the information given to us? Selling price per unit 50 rupees, variable cost per unit 35 rupees, fixed cost 14,000. Enough. These three items are enough to solve all these four. Step by step we'll go, and at the same time I would like to remind you the formulas also. Okay. Now first step is that we have to calculate the PV ratio. What is the formula for PV ratio? I am asking you. S minus V by S into 100. Okay. S minus V by S into 100. So this is the formula. S is here 50. 50 minus 35 by 50 into 100. 50 minus 35 is 15. 15 into 100, 1500 divided by 50, it is 30. Means PV ratio is here 30%. Got it? PV ratio S minus V by S into 100. You know, S is 50, 35 and by 50 into 100 you got the PV ratio. Next, BEP. What is the BEP? Will calculate in rupees and in units. First one, BEP in units. Formula is fixed cost by selling price per unit minus variable cost per unit. So this is the formula. Now fixed cost is, you know, what is the fixed cost? 14,000 divided by selling price. Selling price is here 50 minus variable cost 35. 14,000 divided by 15. Isn't it? 14,000 divided by 15. It is 933. 933 units. If you want break-even point in units, sorry, in value, in sales, or you can say in value. Simple, the same formula you can use it, BEP into sales. BEP in units into sales. BEP in units is here 933. 933 into sales. Sales are 50. 933 into 50. It is 46,650. 46,650. If you want to write the formula, you can do that also. say for example, rather than this, if you want to follow the same formula, then you can write, I am showing you here, fixed cost by S minus V into S. This formula you can use rather than this. If you use that formula also, what happens generally? Fixed cost is 14,000 minus 50 minus 35 into 50. Answer will be 46,650 only. If you want, you can use this one rather than this bit, okay? Because we have done in the previous class the same formula only, doesn't matter. Now BEP is over. Next, what do we need? Margin of safety. Margin of safety, simple formula, always we have to use it, is actual sales minus BEP sales. Easy way to remember, easy way to calculate. Now third bit, margin of safety. Actual sales minus BEP sales. Break-even sales. What is actual sales? Actual sales are 50 and output is not given, no? So if output is given, suppose say let us take output, that's in units, okay? If output is say 1000 is the output, assuming that. In the problem might have given, I forgot to write, I think. So output is 1000. So selling price will be per unit is 50. Now actually it is output. So total actual sales will be 50 into 1000, 50,000. Actual sales, okay? Yeah. How do you got 50,000? 50 into output 1000 minus break-even sales. Always remember, when we want to calculate margin of safety, we need sales in value, not per unit, because break-even sales we are taking. Break-even sales means actual sales we have to take in rupees. In rupees means we got it 50,000 rupees. Minus break-even sales. Break-even sales are here 46,650. 46,650. It means it comes to, I think, 3,350. 50,000 minus 46,650. Yeah, 3,350. This is margin of safety. Next, what else is required? Sales required to earn a profit of 30,000. Debit. Sales required to earn a profit of 30,000. If you want to earn a profit of 30,000 rupees, what would be the sales? This is what they are asking. Sales required to earn a profit of 30,000. For this, I told you one formula. In formulas class, last formula it gave you. So that is sales is equal to fixed cost plus desired profit. You can say simply profit or desired profit by PV ratio. When do we use this formula? Especially when we wanted to know the sales value, or if you want to know the profit value, any of this value, profit or sales value, you have to use this formula without any hesitation. Now what do we need? Sales required to earn a profit of 30,000. If I want to earn a profit of 30,000, sales, how much is the sales? So for that, sales are here given already, 30,000. Sales we wanted to, sales required to earn a profit of 30,000. Sales we wanted to find out. So sales we are going to find out, fixed cost is 14,000 plus desired profit. How much profit you want to earn? 30,000 profit. To earn a profit of 30,000. PV ratio is, already you got 30%. we have written here. Okay. Now simply calculations. 44,000. 30% when we are taking means 30 into 100. So we'll use the calculator. 44,000 into 100 divided by 30. It is coming to 1,46,667. 1,46,667. Now I'll make you to understand. So sales required to earn a profit of 30,000. When we wanted to earn a profit of 30,000, how much should be the sales? The sales should be at least 1,46,667. Then only we are going to get a profit of 30,000. So this is the meaning of this calculation. Am I clear? First take a screenshot or note down, then I'll give you a recap. There is nothing to worry. We have given 4 items, that is selling price per unit, variable cost per unit, fixed cost and output of 1000. Output is required to calculate the sales value in rupees. What they are asking, PV ratio, BEP, margin of safety, sales required to earn a profit of 30,000. First PV ratio. PV ratio formula is S minus V into S into 100. S minus V by S into 100. So as per that you got 30%. Then after that BEP as per units wise. If you want units wise, fixed cost by selling price per unit minus variable cost per unit. So you got 933 units. And break even point in value. In value means this 933 into sales. 933 into sales, you got it this much, or otherwise you can follow this formula. And next after that, margin of safety. Margin of safety is simple formula you can follow. Actual sales minus BEP sales. Actual sales are 50,000. How do you got 50,000? 50 into 1000. Okay. 50,000 minus break even sales. Break even sales are 46,650. So the difference is 3,350 is the margin of safety. Next, sales required to earn a profit of 30,000. When we wanted to earn a profit of 30,000, please remember this formula. Sales is equal to fixed cost plus desired profit by PV ratio. Sales we wanted to find out. Fixed cost is, desired profit is 30,000 by PV ratio. If we have done the calculation, you got 1,46,667. So this is the sales required to earn a profit of 30,000. That's all. If you can understand this problem, I can say 80% of marginal costing is clear. Nothing to worry. So please stay connected. Don't forget to share these videos. Practice well. Have a bright future. Next class we'll see some more problems. Good luck.